After years of keeping their powder dry, banks are ready to open a new front on the battlefield of tech IPOs. Chip designer ARM is preparing to go public and sees being a private holding of Softbank. UK-based ARM is one of the oldest names in the business, producing the electronic brains that keep our smartphones and laptops running. Its main source of revenue comes from royalties paid by other companies that use the systems it develops. The company's shares could be worth as much as $70 billion when it goes to market. ARM was a public company until Softbank bought it for $32 billion. That's in 2016. And a bid by chipmaker Nvidia in 2020 was halted by antitrust regulators in 2020, fearing it would unfairly dominate the market. Let's get more on this now with Vicky Price in London. She's a board member at the Centre for Economics and Business Research. Thank you for joining us today. Vicky, first of all, we've said it's a historically slow period for tech IPOs. I wonder why. I mean, is it just because of higher interest rates, or are there more structural reasons as well?
Well, the high interest rates you mentioned are indeed a factor, because quite a lot of companies ended up with a considerable amount of debt. And of course, as interest rates go up, that makes life much more difficult. And in many areas, of course, we haven't seen the profits that had been expected to emerge. We did have a boom during COVID when, of course, anything tech was much in demand. And of course, more recently, we've had the AI craze, if you like. So some stocks are doing reasonably well on that. But overall, the market has slowed down, and we've seen a move away from more risky assets. And that's really what has brought the entire tech sector down. What we're seeing, of course, with ARM is that may be reversed, depending on whether they're able to attract that amount in terms of the money that may be put into the company and the valuation that you mentioned of possibly $65 to $70 billion.
Right, ARM, very important companies for the likes of Apple, Google, and many other companies as well. What's its strategic importance for the UK? And is ARM also in some way part of the broader chip war?
Well, you could see it perhaps that way, but I mean, the truth is that the US markets are much deeper and wider at the same time, so you can get much better valuations in the US than you can in the UK. The UK had been trying to ensure that ARM would list in London, but unfortunately the decision was made to not do so. The valuations generally in London tend to be considerably lower, and there's been an issue about whether it remains as attractive as it did post-Brexit. So pre-Brexit, it more or less commandeered, if you like, the position of being the sort of centre for financial services here in the UK, in Europe. But of course, that has now changed. Well, unfortunately, of course, it is a UK-started company, which was perhaps, the apple, if you like, in the garden of UK tech sector. Well, that move, of course, is going to be a bit of a blow. The UK has been trying, of course, to change its rules and make it easier to list in the country. That is slow moving, but it may happen at some point in the future, but that will be too late, I think, for ARM.
Vicky Price, really good analysis indeed. Thank you very much.
Thank you.
And now let's go to the top stories from around the world. Mining giant BHP Group has reported its lowest annual underlying profits in 3 years, falling by 37% to $13.4 billion. The loss in profits was due to a pullback in commodity prices and a slowdown across the industry in China and the US. The Australian group also said that it did see growth from some sectors in China, those outside new housing states such as infrastructure and automotives. Gold miner Newmont Corp has received the go-ahead from Australia's competition regulator to proceed with an almost $17 billion takeover of Newcrest Mining. The deal will solidify Newmont's positions in the gold mining sector. Newcrest has said that it would back the takeover offer, being the third largest deal ever involving an Australian company. And space company Axiom has raised $350 million in a funding round led by Saudi-owned Al Jazeera Capital and Korean healthcare investment firm Boryung. Axiom said the investment will improve its development efforts. The US-based company trains and flies astronauts on missions to the International Space Station.